Hello, folks. Welcome to my YouTube channel. My name is Nelson Akon. Now, I started this playlist of to actually show my perspective of the marketplace, weekly and, in terms of short-term trading as much as I can to, you know, traders that basically want to learn the way I trade and, try to trade as well in the same manner. Okay, now for starters, I trade, uh, or I would say my trading model is something I derive from learning, ICT concepts. I wouldn't say I directly trade ICT concepts because there are certain tools that I don't use. However, these concepts, you know, contain some of the bedrocks in which I base my trading. Now, this is going to be a weekly forex analysis video, or this is going to be it's my weekly forex analysis video. Now, right off the bat, I will have to say this: I only trade four pairs for now, closely correlated to the dollar index. Why do I trade only four pairs? So I have enough time to monitor each as they progress. Now, for making so without wasting much time, let's get into the business for the day. You see, this my British pound chart. I'm going to just go to the monthly and clear out everything I have, so that I start afresh and you guys know what I'm pointing at and at the time I'm pointing it. So I'm just going to remove this. Now let's start from the monthly. What I'm looking at now, important to say this before putting any line in the chart or saying anything that can actually instigate a trade idea in your mind. I am not a certified financial advisor. I am simply giving my opinion of what I expect to happen in the marketplace. My opinion shouldn't hold more water other than yours. You have to do your own research and analysis before putting live money in the financial market. Right? Now, with that out of the way, now let me quickly get into the business. You can see from the monthly, what do we have? We have what this relatively equal highs that pretty much look like buy. Now, the way I like to analyze, I just look at the current price action because I'm current primarily a day trader. So I just look at the current price action to know the most probable move that is going to happen, near term, which I can profit from. Now, from what I see here, we have relative equal highs. So I'm gonna just, call this quickly recalibrate that, then I'll give it the template of buy side liquidity. Right? We have relatively equal highs now. How are we gonna get there? We are already, approaching those levels from where? From the open of this other block. Right, let me quickly calibrate this as well. Right? So that's the other block there's a strong up of on the monthly and we're trying to reach this level. Now, I'm not saying we're going to reach these levels in next week. However, these are just how I pretty much mark up my chart. This can be year even up to the third quarter of the year. We might just end up, losing the sale. It doesn't really matter. What matters is what I'm going to do with my 4 hour chart and my daily chart in intermediate short term. You understand? Now, moving on, what else do I see? I see a stop on, right, and a reaccumulation moving long, right? Let me quickly label this stop on to I see a stop on. I see stop on and a reaccumulation moving long and another reaccumulation at that point. Now we're taking it long. How are we gonna do it? Obviously, if we're retracing and reacting on this other block right here. Now there's not much on the monthly to also note except for say for this quarter. This stop right here, which would be the hypothetical stop in any scenario if you are buying, this other block. Now on the weekly, what do we have here? We're able to narrow down first off this stop and secondly this other block to this level, right? Now I have this knack of trying to make my lines to the peak. Why do I do it? Simply because I'm not going to say I'm a fan of accuracy. I'm obsessed with accuracy to make sure analysis is not wrong because I trade intraday volatility, and one thing about intraday volatility, you don't want to be wrong because I have a relatively frequent, I trade on relatively frequent intervals, so I really don't want to be wrong and I don't want to be in the wrong side of the marketplace because it can, it can extend, it can be, it can really cause an extended, period of drawdown for me, and that's what I don't want to know. So I understand that there are stocks resting below, right? However, you need to take consideration of this weekly order block being defended and as well present of a fair value gap at these levels right here. Taking that out. How to note that fair value gap right here and the potential of this other block being defended. So I'm going to move this right here to this level because it seems we are already approaching the other block from what we're seeing from this bearish move down. So now let me quickly calibrate that. Perfect. So this is where I'm watching for price action on the weekly to potentially get involved. Now, why that's the case, what do we have on the daily? We have this already. Now, it's easy for me to say on the daily we are on a downtrend and we should continue going lower. However, based on what I see from the monthly, right, this is a relevant stop point. This means a lot. And this high, this stop point right here, if you check it with a line, the horizontal line too, we didn't quite sweep up this high. We only came close. So I expect another, V trade up above. That's typically what I expect, on the monthly time frame. So it doesn't really matter what I'm seeing on the daily. I would trade with caution because for me the monthly is bullish. This is a microstructure shift to the upside, which I should be cautious to respect, right? This is a market. This is a market structure shift right here. That's a shift to the upside. Okay, you can say this lower low was the one that created the higher high, and we broke this high or this high that created the lower low. You want to compare it, you can just use your line chart to know if it's actually a higher low or a higher high. You can see clearly we have this low, we had the higher low, and we had this low which created a high greater than this high. So this is a market structure shift to the upside. All right, so there's not much to explain about that. Let me continue from the daily. Okay, so on the daily, the price action I have here, though this looks like I'm trying to catch an eye, doesn't really matter if I'm trying to catch a knife. We all get to catch knives sometimes in the weekly world. I would refine my order block to this level. I will refine my order block to that level, particularly looking at each, you know, chunk of imbalance to be filled. I will be likely to, get involved in longs if I see an opportunity at this level. And the opportunity should be visible on at least the 1 hour time frame. Now, why the 1 hour time frame? It's typically the time frame I use as my minimum. Typically, the time frame I use as my minimum criteria to determine if I'm going to go long or go short intraday. I Aside from the 1 hour time frame, if the setup is not visible on the 1 hour time frame, I try not to enter. Although I usually stop at the 4 hour time frame when doing my analysis, I like the 1 hour time frame to provide the best possible confirmation, for my trading plan, my trading model. Now, what else do we have? You can clearly see now some of you will be asking, why didn't I add this level? Right? You can clearly see this week came to closing this. You can see the high on this kind of focus on these levels. You can see the high on that candle is what now 1.32457, and the low on this is what 1.32405. We closed that level quite efficiently. Now we are looking, for this last what now fair value gap to be filled. Now moving on, let me go to the weekly. Now so far I don't see anything that warrants a buy in these areas, except maybe if I want to say I'll pull a fib from this low to wherever it reacts. So let's say I keep getting retracement to the upside right away on Monday, and heading into Tuesday and Wednesday, I keep getting a retracement to the upside. I pull a fib and I see this and I start aiming for lower target, which is highly unlikely. Aside that, I really do not see any level right here, at least on the daily chart, that will involve me in getting in short. I do not consider this as another block, or this as another block to go short from. Now, why don't I check out the weekly? Right, this means I'm just going to trade into half of this, and this means I'm going to close in the overall. To close in the overall to get that much price action to the upside, I expect price to reasonably come from a level of interest, which is this other block, and not necessarily just reverse and give to these levels and start crashing down. Okay. Now moving on to the 4 hour chart. Let me quickly delete this. Okay. On my 4 hour chart, what do I have over here? Clearly see a pattern forming. Now a pattern not in terms of price patterns, okay? Not in terms of price patterns really, but I clearly see a pattern forming. Now what's the pattern? I can't anticipate what the high of the week to be formed at these levels. I can't anticipate the high of the week to be formed at these levels. Now, why can't I do that? It's simple. If we get a reaction up here, if we get a reaction up here that comes down to hit this level, we'll be buying from here. Meaning, if I get to consolidate on Monday and trade up, I will be looking to short at these levels with an hypothetical stop right here, looking to target this as a take profit, and that gives me just about 143 or 142, just above 143, which is classic for the weekly range on the British pound. Now, I'm not saying the weekly range on the British pound is definitely going to be over 140 pips next week, or maybe by the time you see this video this week will be for you. I'm not saying that. All I'm saying is that if I am shorting the British pound, this is where I will be looking to short it near 10. That's if price doesn't come here to fulfill my entry right away. And you can see price is currently at equilibrium right now, the middle of the range, right, which I have defined. So I would be likely not taking any trade right here until I hit this POI or this my weekly zone. Now, what do I need to see to actually buy in this POI? I need to see at least a 1 hour shift. Now, I won't go to the 1 hour chart because me going there with me, I will have to refine this POI, which I don't want to do at this instant. Oh, screw it, let me just do it just for this particular chart. Right? So this is what I have. So we can just all right. Now let's get on with it. Now you can see from that line denoted from the 4 hour chart, we have this area of what this area of buy stop right here, which we'll be looking to target at those relative equal highs. So we might just come blow them out and reverse that and not even hit this other block, right? Because this can be enough to push us down. Meaning if we push down from there on Tuesday or Wednesday or whichever the case may be, we might get to consolidate here on Friday. Okay. And secondly, to measure the entire range of this price right now, we see that we are heading towards the equilibrium, which means uh, for traders who prefer to trade in the direction of the weekly range, they would let it get back to what premium before selling again. I wouldn't be keen in you know trying to buy this to the upside. Why won't I be keen to do that? It's very simple. I do not trade on Monday, and if the buy is going to happen, it should happen on Monday. It's that simple. Okay. I think this we are pretty much done with the British pound. Let me delete this and move on to the 4 hour chart. So this is where I'll keep it for now. For further updates on the price action moves and what actually led to Canada, you can check out my Telegram channel, which will be in the description box below. Now, moving on to the next pair, let me check out the Euro dollar. Over to the monthly chart. Now, I'm going to be a little bit faster on this because I believe by now you must have understand the way I pack up my analysis and the way I view the price. So I'll just leave this area as sell stop. Alright. So what do I have here? I have breaking master structure to the outside, retest of the super block, reaccumulation, impulse pricing. Now we are retesting this area. Now, what am I looking at a buy stop to target near term on the monthly? These levels right here, right? I'm going to call it buy sell liquidity. Now, where do I anticipate to be defended? These levels right here. I'm anticipating it to be defended next month, to be precise, which is February. Right? So that's why I hope for, that's why I anticipate to be defended. Now, why do I expect these levels to be violated? This is it. I do not consider this bearish order flow from this order block strong enough. Why don't I? Simply because if you check the 50% of the order block, measuring with the bodies of the candle, you can see we clearly exceeded the whole body of the candle. Inverted down, did another impulse to this candle, then traded down again. So I do not consider that as strong enough order flow to warrant a short or an extended short that will continue. Rather, I see it as an opportunity to get long in the marketplace for these levels. Mind you, I might be wrong because I haven't even checked your time frame to actually see what's going on in price. I will have to shift or adjust my decisions later on, but for now, that's what I'm thinking of. This as buy side liquidity and this as an hypothetical monthly stop if I'm able to get long. Yeah, I don't trade with the monthly time frame, so it's just going to be hypothetical stuff and we'll leave it at that. Now, on the weekly, what do I see? Okay, I will refine this. Oh no, there's no need to really refine this simply because we are still in the area of the fair value gap. I don't want to touch it. Okay, now what do I see? This fair value gap right here. Nothing has been offered, so it makes sense to offer it and move to the upside. I believe it does. At least from what I'm seeing, at least to these levels right here. Now, why to those levels? It's quite simple, guys. If if uh if I'm buying down here, my first take profit would be the nearest point of interest, and this qualifies as an order block, or I should call it a mitigation block. I I will just finish supporting this low. I don't know for sure if this high is going to be protected and end up being the high of the first 6 months of the year. I don't know. I don't even care to know. What I know is that this high is qualified as another block because of this impulse move down. It's qualified as a bearish order block because of the move down. I'm gonna say, alright, let's continue. This is qualified as an other move as an impulse price move down, and this is being qualified as another block based on my definitions and my understanding. Now, as that's the case, that will be my minimum take profit, and this looks from the opening looks about 196 pips. Sorry for the break. Now, this is what I'm basically looking at. If this is the case, what else do I see in price action that warrants me getting or taking profit here at least? Now we see this bearish shoulder flow. I can't deny this, and I can't deny that this is a microstructure shift from the weekly. Right? Why do I qualify it as a market structure shift? I only qualify it as a market structure shift only when this low is violated. Okay, so the way I view market structure shift or SMS as some trader gets qualified or gets to call it, it doesn't happen until the low that caused the failure swing is broken. this low which caused this failure swing has been broken. So for me, it's qualified as a market structure shift. Okay. Now moving on, let's go to the weekly because there's really nothing much on the daily to mark out anymore. So on the weekly, sorry, there's really nothing much on the weekly to mark out. So let's go to the daily. Now on the daily, we have this block of consolidation right here, which we have to contend with. So I will have to shift my block right to a more reasonable area. So let me call this perfect. Quick disclosure. Now this high is here, right? I'm picking this high of this candle because this is the last, you know, bearish candle or set of bearish candle before the impulse price leg. Right? And this is the liquidity void I'm hoping to get filled next. So if this is filled and I'm able to get involved on a long, some ICT trader will classify this as a total soup long. Although I know, oh, although I know the total soup, I I don't primarily trade with total soup setup. So uh, forgive me if I have not mentioned that earlier. But this can be classified as a total soup long. Right? Now moving on, what else do I see on the daily? There's really not too much to warrant a sell on the daily, except aside from this level, which will be hypothetical take profit, except for this level. Okay. Now this poses a real challenge for USD next week or for the coming week because we have to drop down, right, to pick up this buy order and go to the outside, or else we need to fulfill this sell order first so that by the time we are dropping down, we have enough range to move to the upside. And if this area gets to trigger some sort of retracement, we don't get to collapse and trade below this area. Meaning for the British pound, sorry, for the for the euro dollar, what I'm expecting is from here back here before falling, right? And getting back up again. I will resume it. Now, this is more probable for me than the opposite, seeing it just coming down right away or going to the upside. Because if it's coming down right away, I expect this level to be defended to some extent and cause at least a minor retracement, which is what I don't want, price action rise. Alright. Now, why that's the case on the daily, moving on to the 4 hours, what do we have? What do we see on the 4 hours? Still, that level seems relevant, so I will adjust it. Oh, by the way, this is the ICT breaker, right? Not this is the ICT breaker block. So, in case you're wondering why I'm marking that level, I'm not retesting. I'm not retesting. I can't even say it, man. I'm not trying to retest resistance or retest support as resistance. Okay, that's the ICT breaker block. Now, this is typically what I expect to see: a quick reaction from this level and down here, and then buy upward to essentially clear out this liquidity trend line. this this candle line over here. That's it. Now moving on to the next chart. Now you can see, let me quickly do some insight. Let me share more insight on this. Now we see this trend line, right? If we get to see price hit here and it falls into, if we get to see price hit these levels and falls into the order block, right, or the fair value gap, how, depending on how deep it goes. If you start seeing rapid move to the upside from these levels, what do you think will happen in price? Retail will be looking to short from this trend and thinking it's going to continue going down. However, I will be looking to buy out their buy stores and use it as my first extended take profit before a good amount of retracement to look for higher prices. It's that simple, guys. Although I don't primarily use trend line patterns, I'm just trying to explain as much possible concept as I can, or explain as much as I can using known ICT concepts, because I don't use all these concepts. Not because they aren't good, but because I like to focus on specific signatures in price action, and some of its concepts are not required to focus on those specific signatures, and that's pretty much it. Now moving on to UCAD, I won't do UTF today, uh, simply because this video I don't want it to get overextended, and you know keep it at that. Now, oh, this looks like horizontal lines marked up on my chart, but anyways, moving on to the monthly, and I'll just quickly delete everything and have a fresh chart to work with. Now we can see from the monthly, we did a stop rate. We did a stop rate right here. Again, forgive me for my obsession of accuracy. It's required for the way I trade, because I when I when I when I am calling trades on my Telegram channel, I do it with price levels. That way, whichever analysis style you're trading, you can relate to exactly the price level I'm calling. So I don't just say that other block over there or this other block over here. I call specific price levels, like current market price we see is 1.2767 right now. I prefer to call specific price levels than just saying selling over there at that rejection or buying over there at that. No, that's not me. Now moving on. What do we see on Yuka? Clearly we see, should I call this should I call this capitulation of this extended long trend to continue the downtrend? Who knows? Now, when I say downtrend, what am I talking about? If you check out other brokerage that has the US dollar feed, you can see there's a signature downtrend right here. So this might be the capitulation of the retracement to continue going short. Who knows? Let me go back to forex.com. Now, what do I have here as my entry criteria? We just hit this top, trigger this retracement near term, and where are we taking it, or where do we want to take it? Obviously, this level. Let me make that specific. Obviously, that level. Now, why this level? Take a little zoom in. You can see this. You can see this fair value gap over here. This non-traded portion. I expect this long, move to go there and give a complete fill of the fair value gap for further lower prices. Why that's expected on the monthly? Let's go to the weekly to see what we are looking for near term. Now on the weekly, it looks quite closer than expected, honestly, because these levels they are lucky they are looking juicy for the taking. Now I will have to refine this to this area right here, right? That's the refined area, and I'll consider this as what I'm targeting just before what we see on the weekly as what now a mitigation block. Okay. Now I'm not yet to explain the difference between mitigation block or and and then and the breaker block. I'm just you should know that by yourself to do a sizable amount of ICT study. Now we can see uh stock hunt, impulse pricing, drag down, react on the other block, impulse pricing, equal highs, coming back, react on the other block, coming to target this equal highs and hitting this level. Now I can mark up this sufficiently as calling it for as calling it a buy side liquidity. So how do I know hope to target those levels? Now this what I'm about to do is not necessary for price to do it. I can just see price, open up from here and trade here before it starts crashing down. That's very much possible. However, if I want to get in sync with this trend, considering the range we are currently in right now, I will be looking at this level right here as my potential buy entry if I'm able to get any. Now it's not necessary I get any. I have to emphasize that part. It's not necessary I get any, but that'll be my the full area to get involved in long. Now that I have all the relevant figures marked up on the you know weekly, again, hypothetical stops, hypothetical stops. Okay, now we'll move on to the daily. Now this will need a little bit of readjustment, and this candle rather, or this candle instead will get an adjustment as well, and I'll be looking at this high as what recapitalization, right? I'll be looking at that high as a recapitalization instead of entering that low in the range. So that high will be an area of interest. As if I dip in a little bit, I will be looking for long, which is just very close to this bearish candle, which can be classified as a bullish order block outside this stop point. Now, this is what I see on the daily. Of course, I have a value gap right here that can be closed to satisfy my criteria for picking all the blocks, right? So we check out what the 4 hour has, and we see there's clearly nothing in the sight of in the shape of price action that depicts uh bearish orders at those levels. All this for me is all liquidity. Now we might not be lucky to we might not be lucky to see a to see a trade down for me to be able to get involved. If that's the case, still fine. One thing for sure is that this is liquidity and this should be tapped in the immediate future, which I expect it to be tapped next week. Now, refining this further, I'll be looking at this level, near term. Now, why that level? Why not this, right? Or leaving it at this? You clearly see after this, liquidity grab or stop hunt rather than another impulse pricing. This should be the order block, but this did a little bit of mitigation. Another impulse pricing which came back and did a little bit of mitigation. So I'm expecting this low to be a false swing and we should come back down to stop hunt it just as we did this low as well. So if that's the case, this should be my other block of focus, which I have marked up right there. Of course, an hypothetical stop right here. Okay. So that's it, guys. And I have to put on the eyes right here. I'll do a markup for UTF and send a screenshot in my Telegram channel, which I'll leave in the description box below. Also, I'll leave a Telegram link in case you want to ask me any question concerning the way I trade. I'll leave it in the description box. I'll leave it in the description box below as well. Alright, guys, that'll be it for now. See you next week for the next review of price action.